Hello, guys. I hope everyone is doing great. Um, we decided to record a refresher video to go over everything we have been learning since the beginning of this year. So, if you haven't been participating uh, for most of our workshops and online webinars, this is a chance for you to catch up. Now, next year is going to be very great because starting from next week, we are upgrading our signal service. We are going to have our own brokerage as well next year, hopefully, God willing. We are going to have our own brokerage. We're going to start account management. We'll be having a hedge fund company, like a whole lot, so you wouldn't want to miss out. My advice to everyone out there is if you want to trade Forex, first and foremost, know it is not an easy thing. Trading is easy, but learning how to trade is not an easy thing because there's a lot you need to put into trading. You need to give it time. You need to practice, practice, practice. It is not a get-rich-quick scheme. Like you put in a trade today, tomorrow you're buying a Lamborghini. It's never so. It is never, never so. So if you want to be successful and enjoy and have financial freedom, I suggest you practice because practice only makes perfect. If you don't practice, you wouldn't be perfect. So you need to practice enough for you to be perfect. Okay, we're going to start off by having our charts up. Currently, I'm looking at USD JPY. Ignore the time frame I'm in. We did learn about initial structure high, initial structure low, right? I'm going to draw something here. I hope you can see my screen. Then I'll begin. So I have this thing here. Let me just draw this in. Forgive me if my drawing isn't good. I'll try my best. It's going to be a very long video. We're going to pause in and out. Okay, I'm done. Okay, what do I have here? You can see I have this guy going down, up, down, right? Okay. Now, we all know that markets moves either ranging or consolidating, right? So a ranging market is like this. A consolidating market will get to that soon. But this is how market ranges. Down, up, pushes down, pushes up, pushes down, right? These are waves. Some will say Elliott wave pattern. Some will say market has reached a fib level. It needs to turn going up, down. We just say initial structure high, initial structure low, outside return, right? So this is your starting point, right? This first move here is your starting point. Anytime markets moves coming down like this, it decides to go back up to test the level in which market stopped previously. So let's say market came down, went up, came back down. Markets would go up again to test this same level. If this level is strong to hold, market would bounce going down. If this level is not strong to hold, market would what? Change direction and start going up. A simple way, as in how markets moves. You don't have to be a rocket scientist to know this. Now, if we look closely at this chart here, we can see that move happening. Market came down, went up, came down, went up, came down again, went up. Now, we are going to identify where market decided to turn. So this is what I'll do. I'm going to put in my horizontal line. I have one here. Then I have another one here. Bear in mind, it is not every time the market would specifically come to where it did 10 in the past. There are many times markets will decide to even move past it a little bit, but it does respect it. You know, it would always respect it. So yeah. Okay. Now I have these lines drawn in. Now, how do I know the markets moved from this point and went to this point and went to there? I'm going to draw it all in using my trend line. Let me make this line thicker so we can all see. So first and foremost, I'll start by drawing from up to down. I can put it here if I want, or even here. Let me change the color. Let's do it red. So that's the first line here. The second went from here all the way up. Now, markets carried on going all the way down again. See? It pushed past this level here. It went all the way down to here, right? Now, after market came down here, market decided to go back up again, because we should bear in mind market is moving in a downtrend. Market decided to go down up again. To which level? To where it stopped in the past, here. Now, guess what? This level was strong enough to hold. So what did market do? Market decided to give up and go down. That's just it. Market moves ranging or consolidating. So this is one move that happens many times as a trader when you trade in. You must first and foremost identify what market is doing, right? So you can basically know, okay, market is ranging. I can see an ABCD pattern forming. Let's see if we can put in an ABCD pattern here. So if I draw this here and I click down here, up here, come down here again, I basically have an ABCD pattern. You see, A, B, C, D. That's how market is moving. And if I calculate the distance from here to here, it will be the same distance from C to D. Okay, let's move on. Bear in mind, this is a refresher video. So if you have any questions, you can inbox me privately or even in the group and we'll discuss it. Okay. During the year, I remember telling each and everyone that always when you're doing analysis, you must first and foremost identify your support and resistance levels. Also identify the time frames in which you're trading in. You cannot wake up in the morning and just go to a 1 hour time frame, right? And start saying market is going down or market is going up. It is never possible. You can never be a successful trader if you tend to trade like this. Before you wake up in the morning as a normal human being, I guess you would at times check outside or check on your phones to see the weather, right? To tell you if it's going to be hot or not. So just imagine I wake up today without even checking the weather and I'm like, today I'm wearing a jacket. Then I go outside and it's 35 degrees. It's so hot, right? What would happen to me? I might even like collapse, you know, like be sweating so much I pass out. So every point in time, you need to check what's happening. Now, how do I check? We always know the bigger time frames are stronger. The bigger time frames carry so much information. So you wouldn't want to be in a smaller time frame. So as always, this is all you do. Go to a weekly time frame, heck, even a month. It's up to you. If you look at it in a monthly time frame, you know what? Let's even analyze it in a monthly time frame. Let's use a monthly time frame for analysis on USD JPY, right? So what I always do is I do this. I zoom out, right? Zooming out, I can see so many information. Like there's a lot of info going on. I can see heads and shoulders, right? Heads and shoulders. Like I can see downtrends, uptrends. I can see double tops and double bottoms. If you don't have any idea what all these things mean, kindly refer to them in the mentorship vault. There are videos on all this in the mentorship vault. There's also videos on that will be uploading sooner or later in the mentorship vault. That's basically on Fibonacci, how best to use Fibonacci to get profitable trades, and even combining Fibonacci with your ADX. Okay, so this is what I do. Wake up in the morning, I look at it in a daily time frame, in a monthly time frame, right? What am I seeing here? I see a red candle form. Now, with the red candle forming here, what else am I looking for? Because I need more information. Look, if you wake up in the morning and someone tells me, if I wake up in the morning and someone tells me, yo, Kobe, you're ugly, or Pierre, you're ugly, that's my first confirmation, right? That one confirmation doesn't tell me I am ugly. Then I go to the gym, I'm training, people keep on staring. Then they come up to me and say, hey, dude, you're so ugly. That's the second confirmation. Now I'm driving back home in traffic. Someone will just yell and say, hey, guy, you are so ugly. That's a third confirmation. So I have three confirmations that prove that I am ugly. The same way you are trading, you need confirmations. You need to know where your market is going to, which trend you are in, what is happening. Like you need to know what you are about, right? So the first thing I would do is try to identify a trend. Bear in mind, this is a monthly time frame. So you are not obligated to analyze everything here, because everything here, each candle that forms here was formed in a month. Yet, we still need a little bit of information here to add up on what we are doing, you know? So, looking at this, I can say market is moving in a bearish channel. So, that's it there. So, market is moving in a bearish channel. So, this is my market moving in a bearish channel. Then you'd ask me, what about this guys here? Well, this was a breakout, right? Price broke, came down, decided to go back up because price was following a pattern. And I said the beginning of every trend starts with a spike. The beginning of every good trend starts with a spike. So this here, my family, is a good trend. This is a spike. So we can see that USD JPY has been moving in a downtrend for a very long time. Well, it did decide to go up, but it has been moving in a downtrend for a very long time. Now, once I'm done identifying my channels, the next step I'm going to do is identify my support and resistance. Now, how do I do that? Same way. I have a resistance here. Where else again do I have a resistance? I have a resistance here. There's something that needs to be done here, but that is saved for people in the mentorship group. And then we can go deeper into all the stuff, you know. So once I have my resistance line drawn in here, all I have to do now is find my support. So this is my support line. I'm trying to find a support line here. My support line I will find here is basically down here, because that is where price stopped at. So that's my support line. That's my support line there. Let's see if we can find more support lines, right? I can also see price stop somewhere around here. So that's also a support line. So let's go ahead and put a horizontal line underneath here. Support. Where else? Where else? Where else? Okay, I think here, but I'm not going to put anything here for now, because I don't know what's happening with the markets in this case. So after analyzing in a weekly time frame, in a monthly time frame, I move to a weekly time frame. Now, this is a weekly chart that is now loaded. So you see, this red line here was from a month. Let's zoom out. Do you see it? Trading is not hard, it is easy. Do not complicate things for yourself, because everything you see here is easy. Do not let anyone lie to you. Trading is so easy. You don't need to complicate things for yourself. After drawing this in here, we now need to come back to the weekly time frame to identify our levels of support and resistance. So the weekly, I'm going to use, which color? Let me use green. So resistance, I found one here. You can also see another one here. Resistance. You can also see support here. I don't put it on the wick, I put it on the body. Bear in mind, in a month, this here was on the body, right? So it makes sense. It only makes sense. Let's find more. Let's find more. Let's find more. We're trying to break it down as easy as possible. Okay, I put it here, right? Now, in a weekly time frame, you can also identify a pattern. Now, this pattern you can identify, it's easy. You can see price comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up. There is something here that is preventing price from going above this level to 117. And price has been struggling to reach this level in a very long time. We've currently approached another level, a strong level of support. If price holds this support, price is going to bounce back, going where? Up. But currently, price is still here. Now, I am going to indicate the parts that I feel is a strong level of resistance. So let me just draw it in here. That's what I always do. Let me fill it up with a red background color. Good. So I'm done with this. I know where market is going to, because market is in a bearish channel. Market was coming down. See how everything was moving downwards? See? Down, right? And now we have approached a level of support here. So let's see if price can hold. If price can't hold here, we know where market is going to. So now with me being able to identify this move here, what's next to do? Go to a daily time frame. Bear in mind, you are doing analysis. Now in a daily time frame, this is what I see. Remember I said market was at a strong level of support. Market pushed up, got tired. We don't know what's happening here. Market might come down, might go up. We don't know, but we are yet to find out. We are yet to find out. Now, what I see from our point of view, it could be two things. This could be the left shoulder. This could be the head. And this could be another shoulder that's forming. That's one. Two, if market decides to stop here and not break above here, market is coming down to fill up this wick. This is what we call the wick fill. Market will come down to fill up this wick here. So now I've been able to identify the trend market is following. Let me go back to a weekly time frame. There's something I left out. In a weekly time frame, after drawing my lines in, all I have to do now is just add a trend line, because I somehow feel this gentleman might push going in another direction I know nothing of. Okay, so what have I done? Simple. I'm saying if price breaks this line here, I'm taking a sell to this purple line down there. Do you see this line here? So I wouldn't be in a rush to buy or to sell. I'm just waiting for that break. Then I can confirm my trade. Now with me doing this, this is a zone. Anytime market reaches this zone, what happens? Market decides to fall. Anytime market reaches this zone, market decides to fall. Anytime market reaches this zone, market decides to what? Fall. Okay. Let's go to a 4-hour time frame, since we are not going to do anything here. So in a 4-hour time frame, let's see what's happening. In a 4-hour time frame, this is what we have. Market just spiked here. Anytime you're trading and you see a big spike down, right? It is called, what is this called? I'll get back to it. I think it's liquidity. Buyers are now coming in, like there's a push. Market wants to push going up because of this guys here. Now, if you go to a smaller time frame, you would see that everything here is candles that has been filled. Let's check. You see, it keeps going up. Smaller time frames will show you that everything that's happening here is candles that are just filled up here, right? And anytime, I'm going to repeat again, anytime you see a big wick, market is running away from this wick, market is going the opposite direction. Let us tackle this wick. Bear in mind, I said, if you're trading and there is a doji at a level of resistance, it simply means that market is going to change trend. If there's a doji at a level of support, it still means the market is going to change trend. Dojis can be found at a level of resistance or support. Now, my understanding makes me aware that candles with longer wicks belong to the family of dojis. So anytime I see a longer wick or a wick, I consider it as a doji. I know, oh, we are moving to the opposite direction. That doesn't mean if I see this wick here, it means that we're moving down. There is a rule to it. This was a big breakout. Like, it has so much power. Okay. So we're back in the daily time frame. So now my only time I will trade this pair here is when it either breaks or this gap here is filled. Because look, market pushed up, couldn't break above this level of resistance here. So if it can't break, what's going to happen? It's going to come down. And if you look at it from a different perspective, this is a downtrend as well. Market did go up to the same levels here. So since it can't break above it, it is going to go down. So right after doing this, my favorite tool that I use, the ADX, comes to play. Before we go to the ADX, let me explain this. You are trading USD JPY. Which session? The Asian session. You do not want to trade USD JPY during New York session, or because this is the time where it's most effective, most active. I always say this, I sometimes find it very funny when I find traders trading particular pairs out of its session. What are you trying to get? What point are you trying to make? You either risking or you being overconfident. Trading is not a get-rich scheme, as I tell you. There are a lot of EAs out there, expert advisors out there, right? Every EA that's out there has been out there for so many years. So many years. But it is up to you to have something that best works for you. You cannot just wake up the next day and say, okay, I have this EA, I'm going to put in a trade, I'll not do anything, and it takes my money for me. Like, I don't know what you're trying to get at. Two, if you don't know trading and you're using an EA, you don't have any background, you don't even know what a support is. So how would you be able to use an EA? What if your EA sees a level of resistance and decides to buy, and you are happy you're looking at it? Then you start making a loss, then things seem like against you now. You know? Let's add our favorite tool, the ADX. Look, it's already here. So I have my ADX already in, ready. I have all levels here. I don't change anything here. I don't change anything here. Source code, not a problem. I don't change anything here too. You see it? Okay. Let's get back at it. Let's get back. Okay. So now, since I have this, I add my secret weapon to it. Let me forget about the secret weapon. Join the mentorship group. Okay. So now, with me seeing this, I'm beginning to get a clear picture what's going to happen. Let me zoom in. Now, we all know the importance our ADX plays, right? We know that with the ADX, if we have the red on top and the red crosses our desired level, it means we must take a sell. If it crosses if the green crosses our desired level, we should take a buy. But many a times I'm being faced with the question that, hey, I was trading it during this time and I made a loss, or I traded and I made profits. And I'll be thinking to myself, well, it's good you make profits, it's bad you make a loss. But then why would you make a loss when you know that the perfect time to trade your ADX, there are sessions there that you need to trade it in? An example again I'll give you. You wouldn't want to go out in the afternoon wearing a rain jacket. Does it make sense? You wouldn't want to go to the club wearing a swimwear. You wouldn't want to trade Forex sleeping. You wouldn't want to eat with your mouth closed. You know? You wouldn't want to drive with your eyes closed. So why trade out of session? It is no magic. There are a lot of pips to be made. Trust me, you can make so much pips within a day. There's a site called Mataf. I don't know if some of you have heard about it. Let's check it out now. Mataf. Let's check Mataf out. That's it here, Mataf. I hope you can all see my screen. Now with Mataf, what happens with Mataf is this. You get to see the number of pips that a pair will be during a trading session. So let's say I'm checking Forex volatility. I type in, let me just say USDJPY, because that's my baby. So USDJPY, right? You can see it's loading here. Let's see what happens. Let's wait for it to load. I just want to explain things. Trading is not just about you waking up and just seeing something, just punching buy, sells. There is a lot to it. You need to understand the basics, like the foundation. Then you can carry on punching your buys and sells. We're waiting for this to happen. Then we just, because I want to explain things to you. We're learning. You know what? Let me just refresh it. Okay, let's ignore it. Let's just look here. AUDCAD, there's a trend. There's a number of pips that you can make on this pair, as in on Friday. You know? So with me seeing this, I'm not going to be greedy and say I'm going to make 200 or 300 or 50 or whatnot. No. I always stick to my 10 pip, 10 or 20 pip. It's either 10 or 20 pip. Easy. Okay, let's go back here. Why do I say 10 or 20 pips? Listen, if you have an account of $1,000 or £1,000, and with you trading, you decide to enter a trade from, let's say, here to wherever it will take you to, and you saying, I want to make 300 pips from this trade. Well, I'm happy for you. You want to make 300 pips. It's all good. But one thing you must know is we have sessions, right? We have sessions. Every country, every currency, every trading history, like everything concerning trading, there is a session. You cannot wake up one morning and say, I'm trading USD JPY, so I'm supposed to make this much of money from a session. 300 pips, 500 pips, 1,000 pips. It sounds good, right? Like it's so much money, but you wouldn't want to trade during that time and make so much pips. What if you are in a trade from here, right? Coming down, and your target was 300 pips or 500 pips, and you are in a daily time frame. Let's just say a 4-hour time frame, right? From here to here. Now, you would start selling from here. Market would come down to this level of support here. Then it decides to go back up. Let's just say you are brave enough. You're like, no, I'm still going down because I'm coming here. You'll be in. Now, as soon as it starts consolidating, you start panicking. You're like, hey, what's going to happen? Is it going to go up? Is it going to go down? Then it starts shooting, going up. Start shooting, going up. You will panic. You will leave your trade. You will close your trade. Why are you stressing yourself so much when you trade it? Why can't you just target 10 pips? Your account is $1,000. Enter using 0.02 or 0.03. Enter your trades like 5 times. That's 0.15. If you entered 5 times and each trade was going to make you, let's say, $10, that 5 times you entered would be what? $50. You've made it in just a small trade. You in and out. You are done. Do not look at being in a trade for long, targeting 300 pips. Listen, Asian session starts from 12 to a certain time. A New York session starts from 9 to a certain time. Would you want to be caught in between sessions whereby you were selling USD JPY, then New York session came, then USD JPY decides to change trend? Now that's what happens if you set unrealistic goals. If your TP is all the way here and you are selling here, then all of a sudden it starts going up. You are in a big loss. So set realistic goals. Okay, let's look at a different chart. We'll analyze this chart as well based on a lesson we learned. GBP USD. What's happening now? Okay. GBP USD. Let's check in the daily time frame. Okay. I quite remember beginning of this year, I did explain what a double top is. I explained what a double top is and what a double bottom is, right? Okay. Now with a double top, price went all the way up to here. Price went all the way up to this level here, right? It decided to come back down. Now, price was supposed to carry on going up, but this level here was so strong. So what happened? Price couldn't close above it. Price couldn't close above it. So hence, this is a double top. I'll give you a small thing here. So this is price. moving up, comes back down, price came back down, right? Now, this guy wants to go back up. But guess what? These guys here, they are so strong that price couldn't go up again. So what happened? The guy fell. You see? He went up, got stopped out because of the resistance here, came down, said, no, guys, we're going back up again. Went all the way up again, couldn't go through. Now, the rule is, if this guy here, if this gentleman here crosses above here, that means the next guy will come down and test here based on this level here and go back up like this. Right? Then push all the way, sorry about this, and push all the way going up. I hope you're following. So he went up, down. If he could break this resistance here, we know for a fact that he's going up. We know for a fact that he's going up. But because he couldn't break it, where is he going to? He's going down. Okay, I'm going to pause this video here so that I explain it further. Look at this carefully. Market goes up to a resistance, comes down, support, up, resistance. If market can break above this, it's going all the way up, right? Since market likes playing games, he'll come down to tease this level here. He came down to tease this level. This level was like, hey, we're tired of you. Just carry on going up. Then he went up, right? But because in this case, this gentleman couldn't break above it, guess what happened? Let me remove this. Because this gentleman couldn't break above it, he decided to what? Go all the way down. So the minute I see this, I just put in my sells here. I sell to this level here. I am done. Or I can use my Fibonacci. I'll explain Fibonacci later. I am done. I am done. Okay, I'm going to give you 3 minutes. Just have a look at this. We will continue now. In the back here. Okay, let's continue, guys. I'm back. So, as you can see, the minute this guy doesn't break above this level here, right, we're going down. Now, which tool is best to analyze your divergence, right? You do not trade double tops alone. We trade them using RSI, Relative Strength Index. Now, with using RSI, there are 3 levels that you must always look out for. I know in the mentorship groups and other places, I only taught 2, but there are 3 levels. The 3rd level, I'm going to do a video about it. I will post it in the mentorship vault. There are 3 levels that you will never go wrong. And that 3 levels will actually let you know what is going to happen. You know, are we still carrying on going further down, or there will be a retracement, right? There's something other traders also call 2618, right? It is when you have market coming down, up, then there's going to be another 3rd one that comes in line with your level of support here before pushing further down, right? Okay, so basically, this guy couldn't close above here. Now, you'll be asking me, what if this candles here went up to this level, right? So long as the candles here and the wick don't close above this wick here, we are still going down. Let us find more so I can explain further. Let's look through the charts, because it's better we have more examples, right? Okay, I see some again. Wow, this is nice. Okay. Market went all the way up, right? Came down, went back up. Let us put a horizontal line here. Now, look at this wick here. After market came down, this guy went all the way up. Did this guy close, did the body of the candle close above this wick? Even though the first wick is shorter, these 2 are still 1, right? It closed just here. And put a horizontal line there. It closed just here. It didn't close above it, close in line with it still. So with me seeing this, immediately I put in my sell. I take my profits at this level here. It is easy. Very, very easy. Let's find more. Because the more we look at, the more easier and simpler it becomes. Let's find more. Let's find more. Let's find more. If you happen to see some, just scream, I'll hear you. Well, I've been trying to look through for some, but I don't think there's any again. Oh well, here we go, there's some. Now, oh God, I don't like using Apple. Okay, see? Price came all the way down, right? Now, what do you have here? A double bottom. And I'm not going to add the RSI, right? The RSI videos and everything will be posted in the mentorship vault. So if you want to learn more, you have to be in the mentorship vault. What we are doing now is we want everything to be so easy and so simple. So we are going to give you every coordinate, every level for every strategy, right? So that you will be a profitable trader. Simple. But you can only be a profitable trader if you are willing to learn, if you are willing to backtest, if you are willing to ask questions. You can never keep quiet and expect to be fed. You can never keep quiet and expect your answers to and expect your questions to be answered. It doesn't work that way, you know. Okay, so price came down, right? Went back up, came back down. Then you ask me, hey, bro, but you see the candle didn't even reach there. Well, we don't need a candle to reach there. Like, come on, guys. We don't need a candle to reach there, right? The wick was so long enough that it gave us the last push, right? So with the wick coming here, did this candle close below the wick? No, it closed in line with it. Even we have some wick here. So then immediately I put in my buy. Buy all the way to this level here. Simple. It is that easy. Let's look at something different. Let me go to a 4-hour time frame, Euro USD. I quite remember there was a time we were learning about, we were learning seriously about channels and everything. And I want to explain to you. See, the pairs that people trade, sometimes I see someone trading a particular pair, I just laugh. Because you don't know what that pair is going to do. You don't know the spread for the pair that you're trading. Your account balance is so small, it's so tiny, but yet you wouldn't stick to basic pairs. You're trying to go all out and trade any pair that you find in your MT4, forgetting that you're putting your account balance at risk, right? Look at this pair, for instance, Euro USD. I have friends who trade Euro USD, but I in particular wouldn't trade Euro USD. It doesn't look clean. My opinion. If I go to a daily time frame, still, there's a lot of things going on here. But well, let's tackle this. As you can see, yet again, you have price going all the way where? Up, came down, went up again. What's going to happen? Price is going to fall. Do you see it? Double top. But there is a strategy when you trade in double top. Compare Euro USD daily to any currency pair. Like, they are so, like, this pair has huge pushes, you know? The consolidations here are a lot. Before you trade any pair, kindly check the spread. Kindly check how much that pair is going for. Then you can have your alternative to say, okay, fine, I want this pair. You can have several pairs on one single chart in an MT4 in a single trade. You have like, you trade in 3 different pairs. Then you expect to have your free margin run perfectly. No, you would blow up your account. You'll be getting margin calls. You'll be panicking, you know. Let's look at a good pair, guys. Look how neat this looks like. Very neat. Okay. Let's begin with the next lesson. Do you see how gold is moving? Down, up, right? Now let's do this. Remember what I said, that if price doesn't break above this structure here, it means that we're going down, right? So let's put a line here. I just want to explain something to you. Let's put a line here, right? And also a line at the bottom here. Right? Or I can even put it here. Heck. You know, so price was going up, down, up, down, up, right? Now, price was consolidating here for some time, trying to make up its mind, and boom, price went up. Remember the lesson we had earlier that I said price moves in ranging. It can go up, down, up. It will come down again to test where? The initial structure high here. If the initial structure high holds, it will carry on going up. And it did. This initial structure high here could hold. Now, what I want you to focus on is channels. You can't be trading and not know what a channel is. Come on. It's bad. You should be ashamed of yourself if you don't know what a channel is. So this is a channel. This is a channel, right? What do you call this? A bullish channel. Notice how few red candles are in here. It tells you something that, dude, we are buying. There are buyers in this market. Let's do this, then I'll start explaining. Oh, God. My mouse is messing up, so I'm actually using the touchpad for this Mac. Oh, okay. Now, if you look through it, that's the same move. Up, down, up, down, up, down, up, down. Okay. Now, if we are going up, what do? You only trade buys. You do not trade sell when we are going up. Ignore the little retracements. You know, sometimes I find people, you know that a trend you are going, like the market you are in is a bullish trend, right? Markets would always retrace down a little bit before carrying up, going up. So if it's going up, it would go, come back down, and carry on going. You can never have a market going all the way up, one way, and it will never come down. Never. Never. I did predict Bitcoin was going to fall. And guess what? Bitcoin fell. Because Bitcoin, you can never put money into it and say, hey, I want it to grow, it's going to grow, I'm going to make money. No. And cryptocurrency, well, let's not talk about it. But if you are into it, I don't know. So if you are in a bullish market, all you need to look at is to buy. Look for buying opportunities. So you see, price started going up, right? Bear in mind, it can't go up for long, so it came down. Anytime it retraces and gives you your option to buy, you enter, you buy to the next level of resistance. Do not say, I'm expecting it to go all the way here. I am here, I'm expecting it to go all the way here. No, you are not Jesus. You are not Prophet Muhammad. You are not Mother Teresa. You are not Judas Iscariot. You know, be content, set realistic goals. I know that from here to here, if I look to my left, there's a level of resistance here. So if I'm buying from here, obviously I'm looking to take my profit here. If I'm using Fibonacci, I'll take my profits at the next level of Fib. Simple. I wouldn't plan on taking my profit here. Then you would be setting your expectations so high and you'll be impatient. Market doesn't push enough. Then you start panicking. You close your trade in loss. Then market moves into your direction. Notice the bearish channel. Price came all the way down to here. Right? After here, what happened? Market decided to what? Go back up. It went back up, hit this level here, then decided to what? Carry on going down. So this was the time for you to also get in for a sell again. Right? It went back up. Final, it dropped. Went back up again, dropped. Now, looking at your left-hand side, you can see market stopped here. So I wouldn't look at selling again from here to here and say, oh, no, market is coming here. No. Set realistic goals. Look at the one that is present, like recent. See, I was about to say present and recent, so I just said present. You know, look at the one that is recent, right? And stick to it. Market leaves wicks. Wicks is the beginning of a strong uptrend. Look, market did go up. You see this? Now all I have to do, just draw it in. Simple as that. Don't worry about my line. It's a very stubborn line. Do you see it? Okay. I think this is good. So, market moves, channels. You need to know how a channel is, right? Before you start trading, identify all these things because they would make your trading life very, very easy. You can't just look at this and say, oh, we are still going up. What do you see? It's a bearish channel. This is a bullish channel. Notice how many blues are in. The buyers are a lot, right? So why would you be selling here? You're trading against the trend. You're trading against the trend. And also another thing I want to tell you is anytime you see a consolidation like this, right? After every consolidation, market gives a big push. So after every consolidation, there is a big push, either going up or down. We don't know. But we know that after every consolidation, there is a big push. See? Consolidation, big push. Let's check. Oh, come on, fam. See? Consolidation. These are all consolidation. Let's see where the big push will be. Consolidation is simply when markets is doing the moonwalk, you know, is going sideways, right? This is a market you can't trade because markets is just doing the moonwalk. It's not moving nicely, so how do you trade? You can't trade this. You need to wait. Be patient. Let the money come to you. Okay, let's find more. Let's find more. Yeah. Do you see this here? Our recent lesson, double bottom. So double bottom means, let me give you a hint, right? Double bottom means you must buy, right? Now, if you are buying, you're buying going where? Up. Now, if you are in a bullish channel and you find a double bottom, it means that you are 100%. If you find a double bottom in a downtrend, like for instance, you see this here and you said, oh, this guy closed in line with this here because he came down, went up, closed there, so we are going up. I'm sorry, this is not an uptrend. This is a downtrend. So you cannot tell me by looking at this, we are going up. Look at the trend, it's going down. So you can never trade this. It is not possible, right? But judging by this here, this is a double bottom. This is a bullish trend going up. This is a bullish channel going up. So hence, I buy. This is a double top, right? At a level of resistance. Double tops, level of resistance. Bearish channel, hundreds. Double bottom, level of support. Bullish channel, hundreds. Then you add the RSI and the 3 components. Then you sort it. You sort it for life. Okay. Let's discuss our last lesson. Then we're done. The rest of the videos will be uploaded in the mentorship vault. There's so much videos we are actually working on. Some will be as long as 50 minutes, an hour, 30, 25. It's a lot, like a lot of new stuff, a lot of new videos, and you're going to enjoy it. You're going to enjoy it. I want to discuss trading plan. We did discuss it in previous videos, but I think since this is a refresher video, we need to touch on a trading plan. I've been trading for almost 3 years now, 3 years, some months now. And when I began my journey, it wasn't easy. Now, I didn't know anything about stop loss, how to set your TP, risk management, spreads, support and resistance. I didn't know. I didn't know jack. Now, I found an account. I do not want to do mentorship. I do not want to be taught. I don't want to pay someone and be taught, because my idea was, why do I pay this person whereby I can go online and read it and learn for myself? Well, good luck. You must bear in mind, there's not everyone who's online who would actually post the right stuff, right? If you go on YouTube now and you type candlestick formation, there's a lot of candlestick formation videos. Everyone will come up and say, no, trade doing this, it works out best. Trade doing that, it works out best. But believe you me, like, that is not the way to go, right? You find people coming up with signal service, pay me this amount of money, and we would give you this signal service. It is also good, but my question is, why wouldn't you learn how to trade, right? So that if someone sends you a signal and tells you USD JPY, buy. Now, you will check USD JPY. Let's say if this is USD JPY and price was here, and the person said USD JPY, buy. Why would you buy? Because you know that this is a level of resistance. Support, resistance. Buy at support, sell at resistance. Which candles tells you to sell? Harami going short, engulfing going short, the evening morning stars, like all those patterns come to play. All those candlesticks come to play. So if you don't know this, how do you sign up for signals? Right? I began managing an account of mine, which I blew that same day. I almost killed myself. Yeah, it is not an easy journey. But I promise you this, when I was starting this, I had nobody to guide me. In the course of the journey, I had people to guide me. But when I was starting, I had no one to guide me. So hence, it was pretty bad for me. It was pretty bad for me. Like, it was very, very wrong. Everybody needs somebody. You can never trade on your own, right? You can never trade on your own. If I've been doing this for 3 years and some months now, well, I would say I have experience because I have traded every session. I have stayed up for more than 3 months straight trading back to back. I've been doing this for quite some time now, and I'm still doing it. There was a time in my early years of trading, I was trading a demo account because I was starting fresh. The dedication I put into my trading account is crazy. Like, I don't sleep. You would think I'm trading real money, but no, it was a demo when I started trading. Then when I went live, it wasn't the same. I'm like, but demo, I could make money, and live, I couldn't make money. It boils down to your emotions. In life, everything is based on emotion. If you wake up and somebody gives you bad vibes, your whole day is messed up. If you're trading and you are not confident and you second guess yourself, don't place a trade. Do not enter into trades knowing that you doubt what you're doing. Rather be confident, right? So emotion played an important role when I was trading. I'm still trying to control emotion. But the long and short of the story is anything is possible. Anything is possible. I have few accounts I'm managing now for myself. The team, Austin, Ayanda, Kaylin, Paul, they all have accounts they're trading, right? The accounts I now show in the group, which has 5 point something million pound. Recently, I decided to just post it in the group. Not to show off, no, but to motivate you so you understand and know that anything is possible. Last year, I had another account of 120 pounds, which in 3 days, I turned from 120 to 2,000 pounds. You say, wow, this is so unreal, but it is true. How many people can do this, right? But it all becomes possible if you put time and effort into what you're doing. You can never get rich overnight, right? You need to hustle it out. You need to practice. Do not look for the easy way out, right? If you want the easy way out, you need to know what you're about. If you're not prepared to learn, you are not going to make it. Truth be told, if you're not prepared to put in work, you are not going to make it. 2018 is going to be a whole different thing, guys, because we are going to introduce a whole lot of stuff. Like, the mentorship vault is going to be packed with so many videos on different strategies, and we're going to have mentors 24/7 who you can contact any time of the day, any time of the night, because they don't sleep. And they will be there to assist you. They'll be there to shape you, guide you on how to trade and be profitable. Only if you are prepared to go that extra mile. I haven't been working for a couple of years now. It's good. Be your own boss. Anything is possible. Do not look down on anyone in the group, because for all you know, the person who has nothing today might be the one studying. You have a lot. Tomorrow, he might be the billionaire and you be the one going to him for lessons. So trading, as I'm always saying, is very, very easy. If you give it time, you would make it. If you want to learn, you will succeed. For instance, if I want to trade USD JPY and I like gold, I know that they correlate. If USD/JPY is going up, gold is going down, right? But certain times when there are news coming out, I do not want to trade them as their correlative pairs, because you may find USD/JPY going up and gold will also be going up based on news. Do you know the time gold closes? You don't. South Africa time, gold closes at 10 p.m. and opens at 12 p.m. every day, every trading day. USD/JPY, best time frame to trade it, Asian, New York. Asia and London. You're done. Target 10 pips. Enter as many times as possible, bearing in mind your account balance and risk management. Then you sorted. An example I always give people is, let's just say if I am a drug addict, right? And I love cocaine. Let's just say, right? An example. And I wake up around 8 a.m. to go buy cocaine. Now, if you are the cocaine dealer, the one who supplies me cocaine, what time would you wake up? Knowing that I wake up at 8 a.m. to go buy cocaine. You would wake up around 6 a.m. getting things in place, because you know that at 8 I'm coming. You wouldn't wake up at 12, because by that time I would have found someone else to sell me cocaine. So what am I trying to say? If you are trading USD/JPY or any session, well, my session is USD/JPY, the Asian session. If I'm trading the Asian session, I am up. I know that by 1, the market opens for Asian session, right? By 12, I'm doing my analysis. I'm already up. I'm not chasing the market. I am just up, done with my analysis, and I'm just waiting. Around 1, 1:30 to 2, I execute. I put in my trades. 10 pip targets. I stack it up. Maybe 200 positions, or 50 or 10. I stack it up. Set my TPs all as one. Within an hour or two, before the next session will even start, I have taken profits. I just go back to watching cartoons or just chilling. During London session, if I feel I haven't made my targets yet for the day, I just go in for the last time. But if I feel I've made my target for the day, don't be greedy. I am done. I am done. Let's check Mataf again. Oh, I really wanted to show you this, but it's still loading. Oh my God, it's still not loading. It doesn't want to show. I think it's sad. Mataf is sad today. It's like, nah, I don't want these guys to see anything. Okay. Let us try a different place in investing.com. Let's check investing.com. Okay, this is investing.com. We close this guy here. Yeah, give me the South African edition, guys. You see, as a trader, you need to know where you want to view your news and everything for your pair you are in, blah, 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 blah. Okay, let's check the economic calendar. Okay, so this is the economic calendar for tomorrow, Monday, right? Good. So I trade the JPY, USD JPY. So look, around 1 a.m., low volatility expected for JPY, monetary base. It's a good thing. I'm trading, right? 7 a.m. It's a good thing. I'm still trading. Now, around 8, there's going to be a moderate volatility. I would have been done with my Asian session before this time, right? I would have been done. I do not stay in the market for long. I do not stay in the market for long. I'm in, I'm out. Let's check CBS. The CBNC something. Let's see. No. The CBNC. Let's see if I got it right. Yeah. CNBC. It's loading. So why is everything loading and Mataf is just playing games with me? Okay, Mataf, bye-bye. Okay, so I'm in CNBC. Sorry. Okay. Let me check markets. Let me check USA. So here, I come here just to check what's happening with the pairs that I want to trade. You know, USD JPY, my baby. Let's see what you're up to. So you need to be updated to how things are done in the market these days, because it is not as easy as you think everything is. You know, you can't just wake up in the morning and just feel like, oh, markets are going this, so my software is telling me I must do this. No, guys, you need to know what you're about. You can't just come in and start clicking buttons and saying buy, sell, buy, sell, buy, sell. No, it is wrong. You need to know what you're about. Then you would enter your trades. Okay, let me check. I don't have any watch list here, but basically, that's it. There are a lot to look at. There's Bloomberg. You see, there's a lot to look at. Like, you need to be abreast with all this stuff. Bloomberg. So trading is not just about looking at your charts. You need to know what's going on. You know, you need to know what's going on. You need to know what's going on.
We're now reporting over 12 million retail customers.
Okay, thank you guys. Okay, so let's look at the last thing. Last thing. Then we're done, right? Remember the wicks. See, there's a wick here. What happened? Market decided to what? Come down. You see this wick here? Market decided to what? Go back up. Do you see it? See how market came down? Went back up, came down. Market moves in a very nice way. See? Up, down, up, down, up, down. So trade pairs that you know has a lot of movement. Look at this pair. Do you know the spread for this pair? It will try. It has insane spreads. See? How long has it been going up? This a daily time frame, yeah? See? It's been bullish for a very long time. Since when? Since March. God. Now it decided to calm down, right? It needs to calm down to close this gap here. But I mean, see, there's a lot of spike going on. If I look to a 4-hour time frame, see how market is consolidating here. There is no movement. See, there's so much consolidation going on. It is not safe. It is not safe, right? Major pairs will give you the money. Major pairs will give you the cash, but not all major pairs, though. Bear in mind. I find people trading this pair, Euro JPY, and I get scared. I'm like, what the hell are you trading? When we started trading, we didn't know like the effects of trading most of these pairs. We thought it was fancy. You know, you look at my chart, I have Euro JPY, I have GBP JPY, but look at how this guy is moving. Do you think you can make money off this? No ways. You find people trading EURZAR. See? So, guys, this is it for the refresher video. If you have any problem, any question, anything you want me to touch on, kindly draw my attention to it, and I will explain it. Bear in mind, if you want to trade, always first of all do your analysis in a weekly. After weekly, go down to a daily time frame, right? From a daily time frame, you go down to a 4-hour. You can either take your trades in a 1-hour or a 4-hour, right? You can take your trades in a 1-hour or 4-hour. If you feel like, okay, I don't want to take my trades there, I want to carry on going to a smaller time frame, it's up to you. It is all up to you. You know, adding your ADX is pretty simple. ADX is already there now. Close it. In a daily time frame, it doesn't say much. In a weekly, it doesn't say much. In a daily, not much. Not much here. Patience. The best time frame to trade using your ADX in any currency pair, any strategy, is 1 hour to 4 hours. You do not want to even do your harmonic patterns in a day. What if after a day, like you start getting your A leg here, then your B somewhere here? Look, how many days will it take? So are you telling me you're going to be patient waiting for this to happen? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So let's say for 15 days, you are going to sit and wait. Then finally, when it gets to the 15th day, you find out that your setup was even wrong because your D leg was supposed to your B leg was supposed to be here, but now it came down to here. So that means you've wasted time. So best time frames to even do your Gartley harmonic patterns and stuff, 4 hour, 1 hour. You can even get it in a 30 minutes time frame. I would like to touch on the harmonic patterns and other things, but I will share all those videos and any other extra thing in the mentorship group, in the mentorship vault. Sorry. So enjoy the rest of your evening. Good luck. Cheers. And I hope you enjoy your festive season. Yeah. I hope you enjoy your festive season. Good luck, guys.